Good afternoon, everybody. Uneducated Economist here. Thought I'd share this speech with you guys. This one was from the Federal Reserve, November 8th, 2021. The U.S. Housing and Mortgage Market Risk and Resilience, given by Michelle W. Bowman. Now, this is a pretty interesting speech when you start going through it because really what she's talking about is what was taking place during the pandemic and how it is that they went about trying to deal with the fact that there was going to be a whole lot of people who weren't going to be making their payments and we were going to have a major downturn in the housing market. But this is some of the things that they had to say. I will start with some comments on home prices. Home prices have been rising at a moderate rate since 2012, but since mid-2020, their growth has accelerated significantly. In total, home prices in September were up 21% higher than in June of 2020. So there is some bubble formation taking place. When you have such a magnitude of rising as fast as that, it almost leads you to believe that you're moving into speculation territory and that the idea that houses are going to continue to go up in price or at least have this kind of acceleration in price and to continue, that gets people into buying homes even though they're expensive, thinking that they're going to be able to sell those homes for a much higher price going into the future. This is the speculation that a lot of people were moving into. But they go on to say this: the sharp increases raise the concern that housing is overvalued at the home prices and that home prices may decline. Historically, large home price increases are somewhat less concerning if they are supported by economic fundamentals rather than speculation. So what they're saying right there is that, yeah, when you have these major moves, if it's speculation, that's very concerning. But if it's fundamentals that are driving it, well, then you shouldn't be so concerned about those major increases in the price. That's essentially what they're saying there. Now, the demand for housing, this is what they're saying. The demand for housing has risen for several reasons. Number one, interest rates are low. No doubt about it, right? Low interest rates gets people out there wanting to buy those homes or take out those mortgages before the interest rates go up and they have to make a bigger payment on it. So low interest rates are one of the reasons why we were seeing such an increase. Families have accumulated savings. Well, did they really accumulate savings or were they handed a savings? I mean, so if you had gone out and actually had a job where you were saving your money and you accumulated a savings from that, that I would understand that family savings would be a reason why you see home prices moving up as high as they are. Right? If you have more money, then you have more money to spend. But it wasn't from family savings or accumulating from, working. I mean, some of them probably were, but a lot of this was done by just that stimulus being handed to them and injected right into their bank account. So yeah, no wonder why there's this huge savings during this time, right? Anyhow, moving on. The income growth in the past 18 months has been quite strong. Well, okay, sure, I could agree with that, but has it kept up with the cost of living and all the inflation that goes along with it? So even though we've had an income growth taking place over the past 18 months, is it keeping up with the prices of everything moving as well? If not, then that's a neutral stance. I mean, even if it just happened to keep up with the inflation, it would still be a neutral. It wouldn't contribute to more money, more disposable income, or just the more money to be able to make a higher payment or buy a more expensive home. Right? You kind of see what I'm getting at, like these fundamental reasons that they give, and really just doesn't make sense. But then they go on to say, purchases of second homes, for example, have been somewhat high in the past 18 months. Now, that's not surprising. People who can't afford homes go out and buy even more homes. All right, well, that's kind of a speculation, right? I mean, why else would you buy a home unless, I mean, I guess if you were wanting to have it for a vacation rental or just have more assets or something like that. But again, that's more moving into speculation, maybe not so much for a vacation home, but anyhow. Purchases of second homes, for example, have been somewhat high in the past 18 months. Meanwhile, the supply of new homes has been held back by shortages of material, labor, and developed lots. Okay. Again, these are not exactly fundamental reasons. These are reasons, I mean, sure, it's fundamental now because of the pandemic and everything, but when you tell people they can't go to work, or you tell people that, you can't ship these things in the fashion that you used to do. These shortages that are taking place, yeah, there was a pandemic that kept people from going to work, but now there's more about regulation keeping things from freeing up again. Something that I was talking with some other people about is that, like, when it comes to these shortages, if you let the entrepreneurs in, if you say, okay, we're going to wipe out these regulations and just kind of like, let the entrepreneurs come in and do their job and get this material off of these ships, out of these warehouses, off of these rails, and into the stores and onto the shelves, if you just allow them to do that without a bunch of regulations, I think a lot of this stuff would be freed up pretty easily. And so when I think about, like, the shortages that are taking place right now, can the Federal Reserve really fix those shortages with interest rate increases? I mean, is that really how you fix a supply chain shortage? I understand that's how you deal with inflation, price inflation, especially if you have an overabundance of money that's flying through the system. But if you go and you look at money velocity right now, you can see that it's really down, and so is the issuance of loans. So I have a feeling that this supply chain breakdown has more to do with the inflation than interest rate levels, even though the Federal Reserve would love to blame their inflationary or their policies for the reasons that's causing the inflation so they can raise their rates. But I have a feeling that it's more about the supply chain breakdown and the regulations that are keeping those supplies from moving through the system more efficiently. That's my personal opinion on it. Anyhow, let's go back to the speech. Nonetheless, home prices do decline over time. As we all know, home prices declines causes problems and strain throughout the economy. To give just one example, families and small business owners borrow against their homes to fund big-ticket purchases and business expansions. And house price declines make it harder to use homes as loan collateral. Well, no kidding. Maybe people shouldn't be using their houses as an ATM. Maybe that's part of the problem, right? And yet, here it is, you're saying that a home price decreasing would keep people from being able to use their home as an ATM. See, this is the reasons why, the situation in which this country is now faced with so much debt and these, like, unachievable things, like just trying to get into a house with like a normal job. These are the reasons why. It's because when the house prices go up in value, essentially, or price, people run out and take that equity out. And now they have to make a payment on a $350,000 home instead of a $200,000 home, but they're happy because they have $150,000 they get to spend. I mean, does this really make sense? I mean, if you use that money for production, that would be cool. Like if you bought saws. But they don't. They use that money to go buy beer. And then they drink it up and it's all gone. And now they don't have any money left and they have this high payment to make. So this is like one of the reasons why I feel that we're in the situation we are right now is because of that. Because of people using their home as an ATM. And then they go on to say, this effect can be amplified if there is a credit crunch occurs. So right there, if you think about it, if we ever come into a situation in which that lending becomes very difficult for people to get their money, right? Like banks are like, nah, we want higher credit ratings, we want more down payment, we're starting to tighten up our lending practices here. Well, that can be very difficult on these families who are looking to use their house as an ATM. And if they can't do it, then they don't have access to that money. What ends up happening? They end up starting to feel the pain, and then they can't, make their payments anymore, and they can't live the life that they once had, and they have to start lowering their standard of living. And that doesn't feel good to anybody. They start, complaining to, the powers that be that, they're ruining their life. And they start to vote them out or vote somebody else who promises to give them more in. I mean, this is kind of what happens here. Anyway, let's move on. First, high home prices make it more difficult for low to moderate income households to become homeowners. A larger down payment and other financing requirements effectively lock these households out of the housing market. No kidding. So that's what I have been saying this whole time, right? That keeping these prices elevated are essentially keeping people from being able to buy a home. And now what goes along with it is something that I have said about population control, and that they are really trying to control the amount of newborn babies coming into this country by keeping the house prices elevated. People will tendency to have or want to have a family or start a family if they have a home to live in. But if they don't have a home to live in, a lot of times they will not plan to have that family. Now, granted, there is going to be people who are going to have babies in just about any situation, but the idea of actually planning to have a family generally comes with the purchasing of a home. And if you can't afford the purchasing of a home, you may not be planning that family. Anyway, I found that to be interesting in there. Let's see, going on. Early in the pandemic, the strength in home prices was thought to be driven by a decline in mortgage rates. Well, now wait a minute here. Didn't we just hear from you just a few minutes ago saying that one of the fundamental reasons why we have these high prices is essentially because of the low interest rates? Where was that? Right here. The demand for housing has risen several reasons, right? So if the demand goes up, so does the price. The very first thing that they gave for a reason, interest rates are low, right? But yet here, they're trying to say early in the pandemic, the strength of the home prices was thought to be driven by the mortgage rates. But it has become increasingly clear that the low supply of homes in combination with a strong demand for housing is an important part of the story. Well, sure, it's an important part of the story. But one of the reasons why you have such high demand for housing or houses is because there was no foreclosures, or there was not very many foreclosures. Everybody went into forbearance. So all these people who lost their jobs and couldn't make their payments anymore were sitting in a moratorium where they didn't have to make their payments anymore. So some issues started to arise from that. Because what ended up happening is that when people don't make their payments on their home, then what ends up happening is that the mortgage servicer has to make those payments. And they continue to make the payments for you on your behalf. And now what the Federal Reserve, or what Bowman was saying in here, is that if you were in a situation in which house prices were to fall, then people probably would not be rolling their old mortgages into new mortgages, right? You have people who see the value of their homes go up and they want to take that equity out, or they see the interest rates fall and they want to take advantage of those lower interest rates by lowering their payments. Either way, it gives these mortgage servicers a place to get money from, to get revenue, right? So long as you're rolling these mortgages over or you have new mortgages to sell, everything is cool. But the moment that the house prices fall or the interest rates rise and people no longer want those mortgages or to refinance their mortgages, now the servicers do not have an income. They have to come up with that money on their own. They don't have a product to sell any longer. So it was critical, absolutely critical, that the house prices continue to go up during this time. Because if they didn't, none of the forbearance would have worked. All those servicers, all the mortgage servicers would have gone bankrupt, and then the foreclosures really would have kicked in because there would have been nobody out there making those payments. The whole mortgage market would have collapsed. And that's what they go on to talk about. It said here, forbearance has been an important support for workers dislocated by the pandemic and their families. Transitioning the remaining borrowers from forbearance to mortgage modification or other resolution may be a heavy lift for some servicers. Each transition requires getting in contact with the borrower, discussing the options, and figuring out which resolution makes sense for each borrower. So they're saying, like, this is like, you got to go through one by one and, figure out what it is that, you can do to keep these people, back into making payments again. But then, let's see here. But this is what they say. However, if home prices had fallen, right? So if home prices go up, everything's cool. The servicers can continue to make money. They can make the payments. And then when the people get out of the forbearance, and whether they do a loan modification or refinancing or something, then those servicers, they get all their money back. But this is what they had to say. However, if home prices had fallen, instead of rising so sharply, Many borrowers may have faced obstacles to refinancing because of their homes had fallen in value, and so non-bank servicers would not have had revenue from refinancing to put towards paying advances. See, these non-bank servicers, this is where they're saying, like, a lot of these mortgages ended up was with a non-bank servicer. And it's kind of difficult to understand, like, the shadow banking system. It's a lot of people think of the shadow banking system as like a shady banking system. That's not the case. Shadow banking system means it's not part of the Federal Reserve System. It's private money, essentially. It's people who are filling that role of what a bank would do, but they're using private equity to make it happen, the private money to essentially fill in that role. Banks can be very restrictive on, the regulations and stuff like that, where private money or the non-banking industry or financing might be a little less restrictive on there. So it actually provides more financing out there for people to use. And what they are saying is right there is that it would have been a major situation had prices fallen. So they knew they had to keep the house prices up. That's why the moratoriums were kicked in. That's why the quantitative easings were so prevalent. And they knew that if they let those house prices fall, that the whole system would have begun to collapse. So right now, what do? Right? House prices are incredibly expensive. There's very low inventory. Building a new home right now is difficult. And if the prices continue to fall, then we would have some major issues with the monetary policy coming from the Federal Reserve. So now what? House prices are expensive, low inventory, no way that the Federal Reserve will let them collapse. So what's going to happen with the mortgage market from here on out? I mean, what's going to happen with real estate? What's going to happen with the people who are wanting to start families but can't find a home to purchase because they're so expensive and they're having a difficult time actually building them? It doesn't look like there's a pleasant time coming ahead. Even with the raising of interest rates coming from the Federal Reserve, you have to think, how much would those interest rates have to rise in order for people to be so deterred about buying a home that it would actually start to increase the inventory levels? I mean, it would probably have to be pretty significant, considering that there is so many people out there who would love to buy into a home, that any chance that the prices come down, they would probably jump all over it. This is not good. I mean, think about, like, people wanting to start families. It's going to be very difficult for them to start families in this sort of environment. I mean, this is something that we talked about over in China. They wanted to start increasing their families. They wanted to start getting people they wanted to promote the idea of people being able to start families. And what did they do? They nailed their real estate market. They absolutely are trying to drive down the prices of the real estate in China, these Chinese government officials are, in order to spark the idea of people going out and starting families. So what are they doing here? Are they trying to control the population or what? Uneducated Economist, you guys let me know.